Hey folks, it's Matt Thompson here from Thompson Capital Management. I'm the managing partner there. This is your Alpha Seeker review for June 2019. Just a couple quick disclaimers, disclosures. Past performance is not indicative of future results, and you can go find out information about Thompson Capital on the SEC website. So realize that this has been a frustrating start to the year. I think the overarching message that we want to get across is, I want to explain how this has come about, and then secondly, show that we've been here before, and this is nothing new for the strategy, and we've come through everyone with flying colors. So has been a frustrating start to the year. This is the other side of non-correlation. We saw the good side of that in December last year and being up in a down year last year. So we're seeing the other side of non-correlation. Here's why. So we'll start with what Alpha Seeker does as a review. So Alpha Seeker positions in VIX instruments based on its read of the VIX futures curve. So what the curve is just the graphical representation of the prices of each of the VIX futures that go out in time. There's 8 different futures. We're mostly concerned with the price differential between the first 2 futures. There's a lot of information in that differential, and we use it to position in Alpha Seeker. So when at a conceptual level, when Alpha Seeker sees or reads, quantifies an upward sloping VIX futures curve, like what's shown in the green here, that's our risk on signal. That's when we're going to be short VIX or long S&P. So that's what we're doing there. And if on the other side, if we see an inverted VIX futures curve, then that is our signal to go long the VIX. And that the inverted curve happens in a stressed market like December 2018 or 2008, those types of markets. And when we see that signal, we'll go buy VIX, and that we're looking for volatility to rise. In that scenario, we profit if volatility rises. So those are the two sides of the spectrum. What I'm showing you here is the blue line here is the 100-day moving average of the steepness of the curve. So a higher number is a steeper upward sloping curve, so the risk on type portfolio. And on this side in the red, you've got a downward sloping curve. So a stressed market, equities are probably falling, or very likely falling, and volatility is rising. Down here, we're going to own VIX. Up here, we're going to be short VIX. And so what we're left with is the zone in the middle. You see a 0 line here. This means the curve over the last 100 days, if it's touching this line, the curve has been exactly flat. And so here are some times, circled 3 times in the red zone here, where the curve over the rolling 100-day period sat at a 0. And when that happens, our signals, Alpha Seeker signals, are marginal, and we take small positions, and there's a lot of switches in the signals. There's a lot of indecision in the market. So there's no advantage over an extended period of time to long positions in VIX or short positions. And that's what Alpha Seeker trades. So in these periods, the system tends to go sideways like it's been doing. Historically, these are temporary. This is a temporary phenomenon, and I'll show you in a sec here. But typically, you can see that the average since 2004 has been about 6% steepness, and so usually we're in the green zone in the short side of the trade. These are profitable areas for Alpha Seeker, and down here is a profitable area. In between is the jump ball. So this is a system-wide issue. So the VIX is not off on its own. The S&P 500 in the last year has returned about the same as T-bills. So basically nothing, and it had a big drawdown in between and almost had a bear market at one point. And so since January 2018, the S&P has gone sideways in a big range, and the VIX futures curve has gone flat. Well, what that's done, this just shows you system-wide that affects any VIX-related strategy. So over the course, I'm showing you rolling 1-year returns here over time. So as of the end of May, the rolling 1-year return for every VIX-related strategy is down slightly. So the green line is just short VIX, down a little bit. The blue line is just long VIX, that's down as well. And then Alpha Seeker, you can see it's correlating really well with the SIBO put right index. That's just an index that goes out and sells S&P 500 options, and it profits in a real similar way to short VIX positions. And so what this is just telling you is that system-wide, there's a lot of indecision right now around, my best guess would be the rate hike, rate cut cycle that the Fed might be embarking on here, and economic growth around the world seems to be slowing. There's a lot of indecision here. So as I mentioned before, this is, we've seen this before. We've seen it, I've marked 4 times on the chart right here. We've seen it around major decision points for the market, inflection points. So what I'm showing you here is again, the blue line, which is the curve steepness, steep up here, inverted down here. The orange line is the rolling 1-year return for the S&P 500. So we're looking for times when both lines kind of meet up at 0. So a flat curve and a flat S&P over the preceding year. So you can see the other times this has happened. So the first one was around the subprime crisis when it started to come to the fore in 2007, 2008. At that point, you had a flat curve, flat S&P. The Alpha Seeker return was down over that rolling 1-year period in the back test. And the way that one resolved is obviously the 2008 crisis. The S&P went lower, much lower, and the VIX futures curve went heavily backward. That is a profitable environment for Alpha Seeker down here. In the back test, the 2008 period was up a little north of 40%. So, nothing is going to repeat the same way, but that is a profitable environment for us if it wants to decide to go that way. Then we've got a couple other major events here. The U.S. debt downgrade in fall 2011 had a similar setup and similar kind of resolution. It ended up pushing lower, backward for the VIX futures curve, and that was a profitable environment for Alpha Seeker as well. And then you've got in 2015, 2016 area in the rolling year, that was around the time of the first Fed rate hike, and there was a growth scare in the United States around that time. And at that point, it's a very similar setup. You had the S&P had gone flat, the VIX futures curve had gone flat as it was trying to figure out sort of what that all meant and where we go from here. Those are major kind of macro issues that the market was dealing with there. And again, this one actually resolved positively for equities. The curve went back, the VIX futures curve went back to a steep upward kind of risk on scenario, and Alpha Seeker did very well out of here as well. And so today we find ourselves in labeling it recession worry. It's something analogous to this 2015, 2016 type of scenario where the Fed has been raising rates, and now the concern is, did they go too far? What does this mean for growth? And that's what the market has been digesting recently. And then specifically for Alpha Seeker, I'm showing you here, this is the blue line is the Alpha Seeker growth of $1,000 with the back test going all the way back to 2004. So in the shaded area here, the square is hypothetical, and then beyond the square is actual. So this is a growth of $1,000 for that whole series, and then the orange line is Alpha Seeker's rolling 1-year return. And I've marked those same periods from the other chart here, and you can see real similar setup where a flat curve, flat S&P led to flat to down Alpha Seeker in the rolling 1-year period. And so each of those times, the Alpha Seeker returns sort of mimicked what was going on with the VIX futures curve. That's what it's designed to do. And the important part is those were those transition periods, and each one of them resolved nice and profitably for Alpha Seeker. So as the oldest investor in Alpha Seeker, I can tell you that I've lived through, this is a simulation. I've lived through each of these periods, and this is familiar to me. I understand why it's happening, and we also know historically sort of what comes next here, and that's good things. And this is a little bit more specifically on that point is these are all actual returns. This is the top 10, top 11 drawdowns, so peak to trough drawdowns in Alpha Seeker in its history. So the number one thing is we've had much worse drawdowns than this. I've had, as the oldest investor, I lived all of these. This current one, in terms of length, so we're at about 118 days to get from July down to here. It's an ongoing one, so 118 days. Oh, I'm sorry, that is to the trough. 118 days to get down to our trough, which was actually in November. So today we're a little bit above the 7.8. I think we're in the 6 area. So we're 6% below an all-time high for Alpha Seeker. It's taken a while to we've been down here for 100 and some odd days. Pretty analogous to the 2014 period during that transition period in terms of length. But the encouraging thing is that we've actually held the drawdown. This one is about half of 2014's peak to trough drawdown. So we're expecting that the recovery period, once the trend reasserts itself, the recovery period it should be twice as fast. So that's really the main message here today, is that we just wanted to put some explanation around what's been going on, and then just show you numerically, graphically, that we've been here before, about 4 times before. Each one of these has been a good place to add exposure to Alpha Seeker, and everyone has recovered profitably. So please, thank you for listening, and please let us know if we can help in any way. Contact us through the website, follow me on Twitter @DynamicBall, or send us an email. Thanks a lot.